Good day, welcome to the latest news update from Canary News. The dollar surged to a one-month peak as Treasury yields rose, fueled by speculation that the Federal Reserve might delay interest rate cuts as early as March. The Bloomberg Dollar Spot Index climbed up to 0.7%, reaching its highest level since December 13, with the euro dropping to a one-month low against the dollar. This shift followed an increase in European yields on Monday, prompted by hawkish comments from policymakers. Concerns are rising among investors and analysts that the market is overestimating the number of expected interest rate cuts from major central banks worldwide. A speech by Fed Governor Christopher Waller later today is anticipated to provide further insights into the central bank's perspective. Market expectations for Fed cuts by the year-end decreased to 159 basis points, down 3 basis points from Monday. The U.S. 10-year yield rose by as much as 7 basis points to 4%. Analysts suggest that the rebound in the dollar reflects a reassessment of rate cut expectations in the rates markets, coupled with the perception that the U.S. economy is in a stronger position compared to its peers. ECB Governing Council member Robert Holzmann's comments on Monday, indicating that inflation threats and geopolitical risks would hinder ECB rate cuts this year, influenced market sentiment. The dollar has gained approximately 1.8% since the beginning of 2024, but options traders remain cautious about further strength in the near term. Risk reversals in the Bloomberg Dollar Spot Index suggest bearish sentiment in the one-week horizon, while one-month risk reversals remain close to a one-month high. Treasuries are viewed as vulnerable, with traders potentially pricing in an excessive number of interest rate cuts from central banks. Analysts caution that the front end may be overbought, signaling a possible reversal. Apple Incorporated is reportedly planning to remove the blood oxygen feature from its latest smartwatches, the Series 9 and Ultra 2, as a strategic move to circumvent a U.S. ban on the devices in case an appeal fails. This plan was revealed by Masimo Corporation, involved in a patent dispute with Apple over the technology. Masimo disclosed on Monday that the U.S. Customs and Border Protection has approved the move on January 12, determining that Apple's redesign falls outside the scope of the import ban imposed by the U.S. International Trade Commission. The ITC ruled in October that Apple's devices violated Masimo patents related to blood oxygen measurement, prompting Apple to temporarily halt sales of the smartwatches before a stay allowed them to return to the market last month. Apple presented a software workaround to the customs agency, asserting that the redesigned watches definitively do not contain the disputed technology known as pulse oximetry. This significant step would likely be implemented if Apple fails to secure a longer stay from a federal appeals court, with an expected ruling on the motion for a stay coming as early as Tuesday. Apple anticipates this period could last a year or more. While the blood oxygen feature remains available on newly sold units until then, removing this technology from the Apple Watch could impact customer demand, according to analysts. The modified Series 9 and Ultra 2 watches, without the blood oxygen feature, are reportedly being shipped to U.S. retail locations, awaiting approval from Apple's corporate offices to open and sell them. A federal appeals court is also expected to consider Apple's motion for a continued stay on the ban, which was overturned on an emergency basis while awaiting a hearing. The ITC has urged the appeals court to reject arguments opposing the ban's enforcement. That's all the time we have for today. Tune in again tomorrow for the latest news update. Remember to smash the like button and subscribe to the channel. Join us on other social media platforms listed in the description and comments below.